Good to have you back. This episode will examine some of the factors to consider before you pick any crypto to invest in. Why is this important? Well, you see, since the birth of Bitcoin in 2009, we now have over 6,000 cryptos as of 2021, and a larger percentage of all these cryptos are not significant, and in my opinion 80% of them will be wiped out with time for some reason I will be discussing in this video. Stay tuned. Let me take you through a simple process on how to evaluate and pick a reliable crypto to invest in. So grab a cuppa, of course I mean a cup of tea, and then subscribe. Okay, before I soldier on, let me tell you the difference between crypto and stable coin, because people often think they serve the same purpose. You see, stable coins are cryptocurrency that attempt to peg the market value to some external reference. For instance, stable coins may be pegged to a currency like the US dollar or a commodity price such as gold. Okay, let me break it down. You see, we have the two US backed stable coins, the peso and the Gemini. Okay, stay with me. The peso is PAX, ticker symbol. The Gemini dollar is GUSD, which have been approved and regulated by the New York State Department of Financial Services. And if and when you invest in them, though you may make money because of its price stability, but it may not make you a millionaire. Unlike cryptocurrency, I mean the likes of Bitcoin, Ethereum, etc., which are not pegged with any commodities like gold or dollar, and though very volatile. However, you could become a millionaire within some years, so no pain, no gain, more risk, more reward. Okay, please note, you should not invest in all cryptos out there, and this is why I produced this video. There must be checks and balances. That said, let me share with you what metrics or tip you should consider before you pick an investing video. In crypto rather. Okay, this is my first tip. You should do your research, fundamental analysis about the crypto in question, and this is very easy to do. Stay tuned, I will show you the step. Okay, search for the white paper, usually available on the website, like what you're seeing now. The white paper will provide or should outline what problem the crypto is designed to solve, what solution have they provided, who constitute the management, the team behind the project, and the paper should be able to tell us the roadmap or show the different stages and development of this digital asset. That said, okay, here's the key. Use your initiative, ponder to ask if the project can be delivered as stated in the white paper. And again, key point, do you think the management or team have the resources to initiate and execute the project? Let me give you an example of some cryptos projects are considered viable, of course in my opinion. You see, the likes of Bitcoin, Ethereum, Lumen, Chainlink, Solana, Cardano are all designed to resolve and provide solutions to peculiar problems. And 95% of these digital assets I mentioned uses smart contract as a creative tech to achieve their set objectives. Please check all the videos I produced on all these digital assets. Meanwhile, here now, I will relate to 2 or 3. Okay, let us examine Stellar Lumen network. You see, before the creation of this network, the most method of funds across the border by entrepreneurs, students, and individuals is through a system called SWIFT. Yes, SWFT. The transaction takes 2 to 3 days to go through. Besides, there are 2 types of charges attached to the SWIFT system, determined by the middleman, the bank, And the bank usually charge a combination of higher fees and exchange rates for swift transfer. And this is where Stellar Lumen step in as an open network for moving value internationally with standard instructions, a more modern and transparent way to make B2B payment. And unlike Swift, no middleman like bank, it is digital, fast, open to all, and very cheap. When I say cheap, I mean each transaction made on the Stellar network has a comparative low fee of 0.0001 Lumen, which means 1 Lumen value at 40 cents dollar. Okay, now I think you get the picture. Let us quickly look at Chainlink. Yes, so you see, Chainlink is designed to resolve and provide solution to the process of transaction within the cryptocurrency world. Essentially, Chainlink is designed to provide reliable real-world data to smart contracts running on top of the blockchain. Let me break it down. You see, Chainlink is a bridge between blockchain smart contracts and external data sources. Okay, now, you see, in effect, Chainlink is a decentralized Oracle service. It improves smart contract interconnectivity by granting smart contracts access to reliable data, APIs, payment, and other resources. Now, I am convinced you got the picture. Moving on, I strongly recommend you watch my video titled 80% of the digital asset could be wiped out, only 20% will remain. You will have an insight about what to expect in the quote and unquote crypto world. You will see the clip at the end of this video. And next metric or tip to consider is the social media presence. I will suggest you watch YouTube and learn about what people are talking about, what they are talking about the crypto, and take note if possible. And join again community group. Listen to what they are talking about and why are they talking about this crypto. This crypto in question. For example, you could join the community on Facebook, learn and participate in the discussion about crypto, or you could join the Reddit, this guy here, cryptocurrency discussion group, or the crypto market community to learn and share your own view as well. The question to ask is whether what people talk about within this community is 100% correct. No, sir. No, ma. However, it is a source of information for you to do for that research and form your own opinion. Number 3, market capitalization of crypto in question. Yes, so very key. Now, I'm not really referring to Safe Moon. This is just an example. Please bear with me. You see, market capitalization of the crypto in question is also key. However, you should not base all your decision on this metric alone. Why? Because looking at some platform, you will realize that they have inflated their prices rather. How can you find out? Good question. You see, if the crypto has a low daily volume, yes, so as in how much is being traded on daily basis, and if this figure is minimal as compared to the large figure shown as the market value, market cap, this is a red flag, meaning there is a manipulation in the digital asset price. And this takes us to the next tip, of course, number 4, which is the trading volume. Trading volume in the last 2 days. Use coinmarket.com. That's where I am now. And of course, if and when the trading volume is not manipulated, you see the most recent trading volume says, say in the past 24 hours represent a reliable trading activities with the coin, and a trading volume over say $10 to $20 million is a good way to start. Well, do not get me wrong, please. Some investors have succeeded in investing in digital assets with little trading volume and make millions. Those are rare cases. Why? Because you see, recently we now have what is called pump and dump. meaning some group of developers might decide to buy a large quantity of a particular asset to pump the price and sell it as soon as the price reaches a certain peak. And number 5 is to look for and participate in what is in crypto ICO. So what is ICO? You see, it is similar to IPO. IPO is initial public offerings. Why ICO is, and I'm telling you the definition of ICO now, is an initial coin offering. With ICO, you are not investing in a company that is listed on the exchange like the IPO. A good way to start is to go to icodrops.com and you will get to see all upcoming ICO. And you should note this: ICO is based on speculative analysis. The question is, what and how do you benefit? Well, you see, you will be buying the crypto at a much cheaper price as you participate, meaning you are buying at egg stage before it turns into butterfly, so to speak. However, you should know that ICO crypto is very much embedded with risk. Well, more risk, more rewards. And let's say some of the cryptos in your portfolio are now going down. I mean, if they are going down in value, perhaps you bought them based on speculation without proper fundamental analysis. No worries. There's good news around the corner, and this is my opinion. I think most of these cryptos would merge with the big players with time, and it will be a win-win situation for all. I hope these steps are useful. Thanks for watching. Again, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon.